last month we covered interfaces and went into how the interfaces are, what types of interfaces we have, and the nature of those, and how they're implemented, and so forth, and automated. And we thought that this month we'd cover foreign currency, not used by all of our customers, obviously, but for some of the customers, it's very important and very valuable. So, and our expectation is, particularly with the new product, which will be not only multi-currency, but multilingual. It will open up more of the world to us. Our goal is to get a Spanish version, which would then open up Central and South America to us, basically in our time zone. So the foreign currency support is a key part of having a product that is internationalized and can be sold anywhere. It is currently only available or only implemented and has an effect on accounts payable and general ledger. We really don't do much with accounts receivable because so much of that is done in the property management system. But if we need to extend it to include accounts receivable, it would not be hard to do. Just there's never been a real need for it. So let's go over here. And so some key points I wanted to touch on here that I think are good things to be aware of and keep in mind. The first is that it'll support any number of currencies for a customer. So a customer could be, let's say they're in the Caribbean and they're paying U.S. vendors and they're paying vendors in the UK or Europe. And so they have to deal with British pounds, euros, and US dollars, as well as the East Caribbean currency, which is their local currency. And so any database can support any number of currencies. General ledger is maintained in whatever is their base currency. So everything that gets posted to general ledger is in whatever their base currency is. So here in the United States, the customers are all in US dollars. Typically in Canada, their base currency is Canadian dollars, though they would then have the US dollar as a foreign currency. In the Caribbean, many of the countries use East Caribbean dollars, but they have a lot of vendors that they pay in US dollars. So it's particularly popular there to be able to handle those situations. So when you do a posting in accounts payable, it gets converted to when it gets posted to general ledger, it gets converted to the base currency, and then is stored in general ledger in that base currency. Typically, they will have, if they are paying vendors in multiple currencies, they will have bank accounts that are in that currency. So, for example, a Canadian customer would have a Canadian bank which is maintaining their balances in Canadian dollars, but they might also have a US dollar bank that they maintain in US dollars so that they can then pay vendors in US dollars out of that account. You can enter invoices in any currency and pay them in any currency, so that it allows you to then enter the currency in whatever the invoice amount is. So if you're again going back to Canada, if you're a Canadian hotel, you get an invoice in US dollars. You can enter it in US dollars and then pay it in US dollars. The system will then automatically convert that invoice as the expense of that invoice to Canadian dollars and post it to general ledger. And then when you pay the invoice, it will automatically convert the payment amount to Canadian dollars from the US dollars, because you're paying it in US dollars.
Bruce, are they putting in the exchange rate, or is it reading dynamically from somewhere else?
No, we'll get to the exchange rates in just a minute.
Thank you.
Slide too. And it's a good point, because there are a lot of nuances and subtleties to that. The currency exchange rate can be modified at any time. Now, some locations are very, very stable. So, for example, East Caribbean is almost always pegged at two Caribbean dollars, East Caribbean dollars to one U.S. dollars, and that fluctuates very little. Here in Belize, it's the Belize dollar is pegged to the U.S. dollar at 2 to 1. So as the U.S. dollar goes up and down in value, the Belize dollar goes up and down in value by that amount. What happens, and I'll get into this and show you this in just a second, that typically what will happen is the hotel will then use an average exchange rate for the month in determining any of if they want to restate any of their information reports or whatever in a foreign currency. But the currency may change at any time. Now, you can change the currency rate, exchange rate at any point in time. You can express it either as a percentage or as a ratio to your base currency, or do it the opposite way. When you enter an invoice, it will convert the amount from the foreign currency to your base currency. And as I said, the same will happen when you pay. If the exchange rate has changed over that period of time, from when you enter the invoice and when you pay the invoice, the system will automatically calculate the foreign exchange gain or loss that occurs as a result of the currency fluctuation.
How does the system know what today's rate is? Is it hitting an API or an endpoint to pull in what the current exchange rate is?
We're not currently doing that. That's probably something we will look at in the future. It hasn't been something we've done to date, but now those things are available as APIs to do that. And that's certainly something I think we'll be adding in the future.
So the current user experience is there's a rate that's set in Data Plus. They could essentially, when they do their work, they could go to a resource, see what the current rate is as of today, and update it in Data Plus, and then it applies it.
Yes, correct.
Okay.
Yeah, I'll show you that screen in just a minute. Foreign currency, to enable it, there's a couple of things that need to be done in the general ledger parameters table. There's a foreign currency enabled flag that needs to be checked. So that needs to be turned on. Many of these settings are only available in initial setup or by support. They can't be changed by the customer, because otherwise people will be turning things on and off and creating all sorts of havoc. So some of these values and fields are only accessible from special screens or special permissions. The other thing that is needed then is the functional currency code. So in this case, it's Canadian dollars, and CAD is the ISO code for Canadian dollars. Then you get into the exchange rate management. So as I said, for many countries, many situations, the exchange doesn't change much at all. And so in this particular case, here is one between the where the it's 1.25. So you could set it up so that it's what is the foreign currency in relationship to your base currency, or you can do it the opposite. Eric has done a lot of these implementations and setup. And Eric, you want to comment on that? I know that you have a lot of first-hand experience in dealing with this.
Yeah. So in the slide there, the screen on the right side, that's where it actually holds the exchange rate, and it can be set up either as like there's a functional equivalent option or I'm trying to remember what the other option is. It's like a per unit option. And the way to look up currency to see what the rate is you can look it up on the internet. And one way to calculate it is to figure out how much US dollar it is to Canadian dollar, for example. And the other way to calculate it is how many Canadian dollars, how much Canadian to the US dollar. So it's either going to give you a rate of, whatever the Canadian rate is, maybe that's 1.25 to the US dollar.
There are now APIs that we could use to look this up and do it, maintain this for the customer automatically. We could do it, daily or weekly or whatever. I'm sure that's something we'll be doing more of as we move forward. But the way the system works is that there is a rate in here for each fiscal period, and that's typically a blended rate or an average rate for the hotel. And I'll explain in just a second how that's used in dealing with if you run your financial statements in a foreign currency. But as you close the fiscal period, it automatically rolls that forward to the next month, which you can then change if you need to or wish to. So that's the way we maintain it. An average rate for the month, which is then used in the financial statements. So here we have, if you want to print a statement in a foreign currency, you go to print your statements, and then down at the bottom, you can then change, you can do a drop down and see what currencies are set up for that particular database, foreign currencies are set up. And then it will then run your financial statement using converting the foreign exchange rate. Usually it will express the financial statement using the foreign currency. And there's a trick to that. One is that it will recalculate the profit and loss using the exchange rate for each month. So if you're in June and you want to do a financial statement in June and you're in a calendar fiscal year, it will go back and look at all your profit and loss balances and recalculate those for each month based on the exchange rate for that month, and then show those numbers, all those accounts, based on a recalculated profit and loss value. Assets are always calculated at the current value because that's what they are. So whether it's, all of your balance sheet accounts are converted at the current exchange rate. Now that gives you if the exchange rate has changed, then you would have a difference. You wouldn't have a balanced set of transactions. So customers are aware that they need to either have an account that they post that to, or just know that in the financial statements that the trial balance would be off because of the fact that you're recalculating your foreign currency values, where you're using a average rate or blended rate for your profit and loss, but you're using the current rate for all of your balance sheet accounts. So in your vendors, you can then go in and set up your vendors and say, okay, for this particular vendor, the normal foreign currency, I want to enter foreign currency invoices in US dollars, and I'm going to pay the vendor in US dollars as well. So that then allows you to select or set up for vendor so that you automatically, when you go to enter the invoice, it will know that you're entering the invoice for that vendor in a foreign currency.
I was going to mention too that I think that the foreign conversion table that shows the conversion rate and the vendor screen here, to me, those are kind of like the two most important features that the customer needs to know about, and especially with setting up their vendors, because you have to kind of picture it as, if you were an accounts payable person, you'd be getting a whole bunch of invoices would be coming in, and they potentially could be coming from 2 or 3 or 4 different countries. So when you're setting up when you're setting up a vendor, what you would want to do is, you'd know based on the vendor address where they are. So you'd want to put in the currency right here, what Bruce has highlighted here with the FC invoices and foreign currency payments, because when you're getting the invoice, it's going to have the amount on the invoice, and you're just You have to imagine it as that if you're looking at an invoice, you're just keying in that amount that's on the invoice, and this is going to convert it for you.
So the next screen here, I'm going to show you what the difference is in invoice entry. So in this case, if we've entered an invoice that's going to be paid in the local currency, you'll note here that it says on the screen when you go to enter the invoice amount, and you put the invoice amount in. But if I were to choose a vendor that is paid in a foreign currency, the same screen will be changed. So the prompt is instead amount, and then it will then show you the currency code for that particular currency. So in this particular case, we are paying an invoice to a vendor that is getting paid in US dollars. And so it shows that the amount here is in US dollars. Then when you run an edit list or journal, then it will then show you both the functional currency amount, that is your base currency that your database is in, as well as the converted amount for the foreign currency. So you get both on your edit list and your journal. So if you look at an edit list or a journal, it will show on that printed report, it will show both the amount that you've entered in the foreign currency, as well as the converted amount that get posted to general ledger. Then, many of the reports then show you both foreign currency amounts as well as your base currency amounts. All right. So that's kind of the higher level overview that I wanted to provide of the foreign currency. Obviously, as anybody in support may get involved with a foreign installation at some point in the future, there are a lot of little details and subtleties to it that we will go over. Someone will help you with as the first time you're dealing with this to help you get all the information you need and to set it up and so forth. But it is a nice feature, and we've had many customers using it for many years. Very, very successfully, and it's it's not something that many of our competitors offer. So it is a nice competitive edge that we have. That was what we wanted to cover today, and as I mentioned, we do this once a month. So if there are particular topics or suggestions for future sessions, please let us know, let Andrea or I know. Otherwise, we'll pick something else that we find is relevant and use that. But if there are particular areas that you would like to have focus on, then please let us know.